Tariff tensions rise. Good morning, everyone, and welcome to today's episode of True Potential's Morning Markets. Now, on Friday, we saw some volatility within asset markets, particularly within equities, where we saw equity markets fall. You'll be able to see that from the tickers on the bottom of the screen. And we also saw fixed income markets react to what was happening. Now, why was that? Well, we saw China announce that they're wanting to have some export controls over rare earth materials. Now, as you will know from April's tariffs that the US were placing on other countries, you will know that those rare exports were part of the negotiations between the US and China in terms of getting that trade deal done between the two nations. So when China has talked about having export controls, that has made the US react. Now, we saw President Trump put out social media posts that he was going to look to put tariffs back on China as a result of those export controls. And he was talking about tariffs of 100%, which were the levels that he talked about back in April. So asset markets reacted to that. We saw equity markets move lower. The US was down about 2 to 3% on that news. We saw Europe move lower. We saw Japan move lower. However, what we saw was that the diversified exposures that we have within portfolios really work and come through. We saw sovereign fixed income markets, yields move lower, so that means the price of the bond move higher. And what was particularly pleasing for us was that that was across all sovereign markets. So that was the US and also the UK. Yields moved lower. So we had price appreciation in those bonds. And we also saw things like gold move higher, which is some exposures that we have within the portfolio. So that need to be diversified really coming through. But we have had progress on those trade issues over the weekend. We've had more social media posts from Trump saying that he will speak to China on the issue. And what we can see when we're looking at financial markets is if we look at the US in particular, we can see what the future markets are doing. So that will give us an indication to how equity prices will open today when they come to trading. And they're up about 1.4% because we're seeing somewhat of a progress and a way to a resolution being reached between the US and China. So we'll continue to provide any updates that are necessary in our videos. The second thing that I'd like to talk about is that we're at the start of the next earnings season for US companies. Now, we've already had a handful of companies report, but this is the first week we get some major companies report and also get a significant number. So we'll get about 10% of the index. That's about 50 companies reporting this week. And as usual, that will start with the financials. Now, what we can see from market expectations is that at the start of the quarter, analysts were expecting about 7.3% earnings growth compared to the last year's quarter 3 results. However, because of positive revisions, analysts getting more bullish, we can see that number has moved up to 8%. So analysts expecting for this quarter 8% year-over-year earnings growth compared to Q3 of 2024. Now, why is that? Well, when we look at tariffs, I think markets had been expecting some sort of inflationary impact coming through. That's yet to come out in any of the numbers. So inflation's been lower than what might have been originally expected. And we're also starting to see the Federal Reserve cut interest rates. They've already done one cut, but the market is expecting more cuts to come further this year and into the start of 2026. So that's just adding to the expectation that we're going to see better than expected earnings numbers than the start of the quarter. So thanks for watching today's video. Please catch us later on in the week for further developments.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.